Hey, everybody. Good afternoon, good morning, wherever you might be. Great to be back with you. Mike Fairbourn here for our swing trading class, where, folks, in this class, we do try to identify, we look for the strongest part of the trend, both to the upside and to the downside. We have a little bit larger group with us today. I do recognize our names in here thus far, though. Hello to you, Jay Richardson, Scott, Chris B, as well as Greg. Welcome to all of you. We've got Kevin as well, folks. Yeah, any questions, comments you have, definitely throw those in the chat box so we can address those for you. But plenty to look at today. It's kind of a fitting discussion for today as well. We're going to be looking at downside protection, particularly on those swing trades. I want to talk about a variety of different approaches that traders can use to protect their swing trades to the downside. So, do recognize a number of you, but we do have many of you that are new. If you are new, just let us know in the chat. Welcome to each of you as well. By the way, folks, I'm joined in the chat. It's a privilege to always have him on board with us. You've seen him in the live events, the Ben Watson, as they like to say. He's in the chat with us today. And Ben, fantastic to have him on board. 30-year veteran in the markets. I've known Ben for quite some time. And any questions, comments you have, folks, address those. I'll try to address them as well, but we do have Ben there to assist. So having said all that, let's hit some disclosures to get the show on the road. This material is intended for general information and educational purposes only. Now, options carry a high level of risk. They're not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Now, the paperMoney software application is provided for educational purposes only as well. Investing does involve risk, including the loss of principal, and for some products and strategies, loss of more than your initial investment. Now, there's no guarantee that the execution of a stop order will be at or near the stop price. A couple additional notes: past performance is no guarantee of future results, and dividends are not guaranteed. We do dive into dividends. We'll see some today as well within the stocks that we look at. Finally, just a glance at our futures disclosures. We don't trade futures in this class. We have another class to do that yeah, we do like to reference the charts as we dive into that. So, all right, fantastic. Welcome to all of you joining us here as well for the first time, folks. Let's do this. Let's go ahead and dive right into our discussion right now. As we look broadly at our markets here, you can see, yeah, a little bit of a gap down, right? So we had been talking about an ascending triangle. Wow, black's not going to work on black. Don't know why it reverted to that, but it did. And we can quickly flip that. There we go. So there is your ascending triangle that we saw heading into oftentimes a bullish type time of the year on average, seasonally speaking, but we broke below that. You can see right there. So that 7,000 may have represented some resistance. We came down. So folks, what happens generally when you see this? Oftentimes, well, there are 500 companies within the S&P 500. Yeah, it's because a lot of these 500 are in fact dipping lower. And we did break below that lower trend line right there today. Some discussion in terms of the US and Europe and back and forth. And anyhow, the bottom line is you're looking at the price results right there. But we want to park that in the back of our minds because that can have a significant impact for declines. And so when I was looking at this class, we were looking at last week, we didn't know that maybe downside protection would be as relevant as it is looking here at these charts. But it certainly is today. So we're going to take a look at that. And when we talk about downside protection, we're talking about protecting those areas of the swing trade. In fact, I'm going to just revert back here to just for a moment. I'm going to jump back to our slides because we do have quite a few people that are new and haven't seen this. This is kind of a standard right here. This is sort of a swing trade that a lot of traders might try to get. This is from a bull flag pattern, and this is when things go right. It's about a 3 to 15 day or even more days of a move to the upside. When you see this, traders are looking for that portion of the trend to maybe they've identified that as maybe a stronger portion, maybe a bigger magnitude in price, whatever the case might be. That's what they're looking for. But our discussion today is also not just looking at these, because we've got some examples to look at, but right here too. What about to the downside? What about potential exit areas when it doesn't go in our favor? What do those look like? And that's a key portion of our discussion today. So I'm going to go through those as we do look and review on some of the trades that we're already in right now. And by the way, to the upside, folks, and of course, to the downside as well. So you've seen that before, but a bull flag or a price pattern like that is very similar to what you might see within a number of different swing trades, right? Trying to identify a range within the trend where prices might go up or down. Maybe the strongest portion of the trend is what we'd be seeking. Okay, so just to review a couple of trades that we put on last week, here is one on Texas Instruments, as you can see over here, and you can kind of see the lines that we've lined up here. One of the nice things about what we talk about in this class is we do look at price patterns specifically, and we say, you know, where do the price patterns sit? Are we trading to the upside? You know, price targets are a big thing with bull flags, for example. This one may be coming off the bottom, an expectation perhaps of some traders that we might reach a target. Again, we're just measuring an initial move, and then from the lows, the pullback, which generally will hold up like a flag. It holds its ground pretty well after a rally. This is where a lot of traders will anticipate the follow-through of the move to the upside, like a stronger trend. You're just taking the same target range and plugging it right over here. That's our target right here on Texas Instruments that we've got in place. It's kind of steady as she goes right now. You know, higher highs, higher lows. Perhaps, you know, prices can bounce up. We shall see on that. That might be the expectation, though, from traders. I will say this, because we're running right into the midst of earnings season right here. And you can see this a lot on a number of your charts. If you've got the corporate actions set up, you'll find this here. Now, a lot of moves can happen around these areas. One thing that we mentioned, I'm actually going to talk about one of the stops right now, one of the ways to adjust stops on the chart. I'm going to come back to this in a second, but it gives us a great opportunity to put out a portion of a way that a stop can be adjusted as well. And that is with the trend. Notice over here, we do have our potential exit level that we've placed right around a prior high. Now we're putting this in place just to help us to avoid any additional downside. Again, you know, once that stop order is triggered, it simply just says, well, you know, send this order out into the market as a market order to compete with other existing orders out there. Okay, but if we break into a new high, let me show you this. I'm going to draw this. You'll see it on the chart as soon as I point this out. But when we make a high, if our potential exit order, that range is where it's at, I should say at that level, potential order at that level is in place, and stop order, one way to adjust these to trade with the trend to try to lock in more gains if in fact it does go below us is we simply do this. We've done this many times before, but if we get a breakout higher above this level right there, very important point, what can we do with our stops, folks? Well, if we break up to the next level, all we're simply going to do is take this stop right here, and we're going to adjust this line higher. So I'm going to shift this up to this level now. And why is that? Well, we made, if this were to happen, we've made at this point a higher high, and we did do that right there. We broke into a higher high range. Do you see it? We hadn't had that previously from last week. So now I'm going to take this stop and just adjust it to the next low. And it is kind of tight, but it is locking in a potential gain here for us if we get stopped out, you know, right near that level. So I'm just going to put it right at that point. And that's kind of tight, but just below that level. Okay. And we could, sometimes traders will say, you know, a dime, 25 cents below that low, whatever the case might be. But generally, if prices are going to run and you break this high, you'd anticipate a break to the upside. Okay. So that is one of the trades that we did put on last week. And that's just a great way to show you that is one way to adjust a potential exit order there. Okay. So next one we did, real quick, AEP, I've just hit a couple this week. This one continued to run up a little bit higher. This, folks, was part of an extended, it's sort of a longer term potential swing trade. You can see that it's had this tendency. In fact, if we go back further, you'd see it again. I'll flip some colors over here real quick, but you'd see this over here. Notice price to the upside, consolidation, longer term move, longer consolidation. We've actually begun to move already here on this trade. It's kind of somewhat of a slow mover. Sometimes these utilities can be, but this is still kind of steady as she goes as well. And this is kind of set in place for a bit of a longer term trade as well. You can see that we have our stop in place down near this prior level. There are a number of different ways, though, to look at stops, and I just want to throw this out here to you, because what I want to do next is just go through each of them step by step as we go through this class. Okay, we take a look at it. Okay, yep, we did raise the stop exactly. So that's a way to adjust the stop with the trend. It could be very much how a trend trader adjusts the stop, what we just looked at previously. Okay, great. Okay, so let's do this. I'm jumping over here. I'm going to go into some paper trades for this week. I'm going to pull up GE for now, and you can see that GE could be in a position where it could start to run again. You know, we had been consolidating for a little bit. So again, folks, we're looking for the strongest portion of the move, perhaps, and that can happen after you maybe start to break prior highs. This was a longer term move, but now, if we look at this, perhaps we could start to get a higher high and a higher low, which is exactly what we had over here. And that's something that we could be looking for. Okay, is that breakout, that extension to the upside. Again, though, we've got to be mindful of earnings coming up just as we look at this. If we were looking at putting a trade on here, because, well, some traders will say this. I mean, you know, we have to be kind of careful here. I did want to show an example, but sometimes traders might wait for a bounce to occur on a pullback. You'll notice we're coming right back to the prior high. There are some lows in here as well where prices might bounce off that level and go to the upside. So this can be an area that can be attractive to investors that want to participate in that trend and maybe trying to find the right place to do it. Again, earnings coming up, some might just want to wait, you know, for that to occur. But let's just say if we were looking at a swing trade, hypothetically, let's say we are getting a bounce today, we're not, it's a down day in the markets, but we have to still kind of explain what this might look like. And if this was the initial run, and this is a bit of a flag pattern here, well, you know, let's just say that today is the low, and it very well might not be the low, and there are earnings coming up too. But if we were to have a run that was roughly equivalent in price over here, there's a target, okay? But, okay, there's the target, but we saw what's happening in the market. The market had been moving down. Earnings can play, you know, an important factor as well. Prices can go up or down around earnings. Now, lately, they've been doing pretty well over this earnings, this earnings. I like to do this. I like to look back and just say, did prices generally go higher after earnings or the trend go up? Yes, it's a factor. But the downside protection, where might we look for potential exits to come in at? Okay, so as we do that, let me throw this over here on the left-hand side, because I'm going to start this out. So I've got, in fact, I'll just pull this guy up and we'll just look at this over here right now. Oh, not that. Okay, that's okay. We just pull this down here. Oh, and we'll pull it up. There we go. Give us a little bit more room to look at. There we go. Okay, so a couple of key areas as we are trying to create downside protection areas. First one is just and we already talked about it, but that is the stop loss. Okay, the stop loss order. Now, a couple of different ways to do it. I'm going to say this first and foremost, and that's technical, right? The chart itself. We have some ways to do it on the chart for sure as we look at this, but a lot of times it can be around a prior swing low on the chart itself. So a prior swing low. We'd already talked about those a little bit. There was this range over here where we're at, kind of at this level. I didn't mean to drop that down. Right over here, that's a support level. Okay, it's a low. I would also refer to this, I mean, that's a support level as well. But then also, here's like a big number, 300. And sometimes stocks can pause around 300 for a while. It did that for about a little over maybe a couple of months, actually. It held that range pretty well through there. So that's one area to kind of keep an eye on as a stop level, right? Will it go below this? You don't want to necessarily keep it too tight, but where are we at relative to some of these key levels? And by the way, you know, how many stop points do we want to have? This is generally after the stock price has begun to already bounce. Today, we're not seeing that, but we'll look at some other stocks as well. But just as an idea, I'm going to zoom in a little bit more just to kind of highlight this. But so a swing low would be a support level. Support, though, can come in a number of varieties, right? There could be a longer term moving average or an average that we're looking at over here. In fact, here is the 50-period moving average. I'm going to throw this on as an example. It's going to show green on the chart. And let me just adjust this real quick here too. Let's just throw this over and we'll say a 20, because a lot of times a lot of stronger stocks might be able to hold a shorter term moving average or hold above it. Well, we're below the 20. Okay, you can see we bounced off it a little bit over here, but maybe a support level of a 20, which we're already below, or whatever the case might be, that could still act as support. And so there are technical indicators like moving averages. Another one, a key one too, could also be something like Fibonacci's. Fibonacci levels. And a Fibonacci level is simply going to be an area where we're looking for support. Come down here into our drawing tools. I'm going to click on the percentages is what it indicates right there. That's what the icon looks like. And these are just levels, percentages that are found in nature, and the market's kind of made up of nature in a sense. We're part of it. But anyways, there you go. Notice it's bouncing right off the 38.2. There's the 50% as well. But these can be levels. If you were to break them, well, there could be support levels. And a lot of traders will say, you know, once I have my Fibonacci's in place, let me try to anchor them, go back to right over here, and really combine these together, or with the moving average, and really try to identify a strong level of support so that we can put some stop orders below it. Okay, over here, yeah, so the 38.2, I think, does a fairly good job of pointing to these prior levels. The 50%, oftentimes known as just kind of a big area to keep eyes on. But if we were to come down here, yeah, maybe that could be a level to watch. By the way, a quick note, because there is the Fibonacci bounce, and if you go below the 50 and break up above, that happens to be where a lot of traders will say that is where a potential stop level could be, an entry level for the continuation of the trend could be. But a number of traders will say, if I go below the 61.8, then on these pullbacks, that could be a real key area, because that's sometimes they say the expectation shift to a downward move as opposed to the bounce to the upside. So just keep that in mind. A quick note though on that fib, just so you guys had it. How did I get that fib? Yeah, down here again, bottom right-hand corner. Let's see if I can just arrow it. Right down here, just click on the drawing tools icon. It's the percentages, and how do you get it set up? Once you click on it, you just, if you're measuring for downside support levels off for potential upward move, click once at the bottom, take it to the top, folks, and just click again. That's it. But that's a way to anchor support. So we're trying to get additional considerations where that support might be. Right now, it's dipping. It's kind of sharp. I don't even want to put like a sort of an entry on this one at all, even an example trade at this point, just because it's falling so much right now. Okay, but technical levels, definitely, we could look at that. Now, if I was looking at a trade though, just to show you, on the trade tab itself, let's just pull up these for a second. I'm going to drop this guy down here. What we could do, and many of you already know this, but right here by the ask price, instead of left clicking, which I could do, pull up the order, I'm going to right click to save myself a step. Let me just focus on the stop for now. Now, generally, we will do an OCO bracket order with the target at the upside. In fact, I'll do it today with you guys. Okay, I'm going to do that trade today, but on an actual trade. This one's still just kind of coming. GE's down 11 right now. But just for an example, with the stop order itself, here is the stop. Okay, some key elements to keep in mind. Okay, first of all, here are our quantities over here. Right, we can lock those in if we want. Very important to have our stop level, our potential exit level at that price. We've got to make sure that these are the same quantities, right? I mean, generally, that's you're seeking that out. You just want to make sure you're not naked a certain number of stock shares, for example. Now, as we scoot over here to the price column, you can see that the stop that we did set up by right-clicking, it's automatically set $1 below. Now, here is the stop right there, and I can change this to whatever I want to match a given level, right? I can just plug that in. I can also just use that $1. It'll put it on the chart, and I can drop it down as well. I'll show you that here in just a second. on another trade, but you can make some adjustments off the chart, but don't want to get ahead of myself here. Okay, super quick note over here under our time in force, the TIF column, folks, right there, you're going to want to put good tail cancel. Otherwise, this potential exit order is the stop here, will fall off at the end of the day. Okay, if we don't have that good tail cancel, let's say we get a fill, we might want to make sure that it stays on there. So just a quick note, I have to note that. I think it's an important point. Now, over here, notice I can't change anything here if I click on STP, that stop order. I can come over here, though. I can unlock it because this locked as a stop right now. Oh, yes. What we were just looking at, what was it doing? It was putting us $1 below the entry price. That is the default stop. But we also have the ability to use percentages too. Look at that. So we looked at initially just an absolute value stop, but now we can use percentages. This is important too. A lot of traders might say, I want to give the stock a little bit of wiggle room. I've just highlighted it. I'm just going to type in 3. Notice there's a -3 because it's to the downside, and I hit enter. That is a percentage there. You can't, there it is. Okay, there you can see it. But that just means 3% below this buy price. In fact, I'll pull it up right now so you can see it. It's another very interesting way to set that stop order. You can see it right there, but it is in place. 3%. It's a 3% target set below that buy. All right, so interesting, right? We've got that. We can do this. Now, as I come over here, I wanted to highlight this because within the stop levels, you can use technical levels in this fashion. I mean, you could do, a certain percent below a moving average as well. But I would also say that on the technical stop, I'm really kind of just talking about absolute values, right? 1, 2, 3, whatever it is, $1 and change down here. But the other side is the percentage stop. And I'm just going to throw this out there. Now, this is a general rule. I've just heard this. There's kind of a range that a lot of traders will use, folks. It could easily be less than or more than this. But I just want to provide a general sort of a benchmark that some traders will use. Okay, it's commonly used, something oftentimes between a 3 and an 8% level. Okay, in that stop. Now, one of the key things when we do this in advance is it forces us to go through and to make sure that we've looked at the stop before we've our potential exit level right before we put on the trade in the first place, and that tends to reduce emotion. There's an emotion decline there, right? I mean, we already have an expectation. I'm risking this much on the trade, and that's one way to do it. Now, there are other stops as well, but I want to put this in here too. There are other things we can go in. There are more advanced orders too, but I want to make sure I get through the generals first, at least in this class here today. Now, under the order column, you can't see this on my screen, unfortunately, but on my second window, it says stop limit. And it also says trail stop, and there's actually a trail stop limit too. But I want to talk about the stop versus the stop limit just as a real quick note. I think it's important. I think many of you already know this. But say, for example, I have a stop here in place at 300, and the market gaps down to 299 at the open. 299. Now, with a stop order, once that level gets triggered at 300, which is where my stop is at, stop at 300, it will trigger a market order, and that order will compete. That's to sell, right? If it hits 299, we'll try to sell as soon as it hits that level. Now, I've seen this happen before, and it can happen around big earnings events, honestly, and that is a stop limit order. And the stop limit order would be get me out at 300, 300. Yeah, if I hit that level, get me out at 300 or better. And some people like this. But if you have a big event, and I've seen this before, I've actually even talked to people that said, I went on vacation, I came back, I had a stop on, and my stop never triggered. It's still sitting out there. Well, it was a stop limit order. It gaps below the stop price, and it does this. It keeps going down. So folks, they were never stopped out of the trade. That's the risk. You like the aspect of get me out here or better. That's a nice feature and it will work sometimes, but some oftentimes don't want to take on the risk of it gapping below the stop, even, 299.95. It didn't hit 300. So it triggered, but it didn't fill at 300 or better. That's the stop limit. And there's some risk associated with that for sure. Okay. So let's do this. I want to talk about that, and that is in there too, right over here. That is this. I'll go ahead and click on it. It's on my other screen, as I mentioned, but there is the stop limit. Not just to get too basic on these, but I want to make sure you guys are clear on it as we set this up. And by the way, let me just reset this guy real quick. I'm going to go back to this with the stop. There is our stop limit order right there. Okay. So there are differences there you can put in place, and you can put that in. It's still setting up $1 below that level. Okay. Now I want to talk about all the downside moves before I talk about the trail stop, which could also be kind of like that initial stop we did on our first trade, Texas Instruments, that existing stock, where we can kind of still raise them. There are some additional approaches to maybe a trail stop too that I want to talk about. But here is a really, really key point. Okay, what kind of stop, how do we increase that downside protection or keep that in mind, implement it when you have something like earnings, or I've also seen it around like a big FDA announcement for drug stocks or something along these lines. You can see like there's a big news announcement. Sometimes companies will pre-announce earnings or, earnings strength or weakness, and the stock can move ahead of time. But one of the key things we really need to focus in on here is how do we account for that risk? Because as I mentioned over here, we're in a stock and we've got earnings, and then it gaps down. And we're saying, well, gosh, I don't know, I'm just going to throw out a number, 500 shares on this. And, it gapped down huge. But between this level and this level, I really couldn't get out. I'll just highlight it. Right between here and here, that's a gap. And I couldn't get out of that trade. You guys have seen these gaps on the charts, right? How do I get out if suddenly prices then resume down here after the event or whatever it might be? How do we do it? What on earth can we do? Because, there can be some pre-market trading, but a lot of times it's still just a gap lower. Folks, what we have to do on something like that is we actually have to make sure we've got the sizing right to begin with. That's the only way to create downside protection. In other words, we have an earnings event coming up over here. Instead of 100 shares, and we've done this, and we do this in our class, but instead of putting on 100 over here, we're only willing to maybe do a half of that or a quarter of that. We say, well, 50 shares instead of 100. This is a high price stock, so maybe it's less than that, clearly. But that is how you've got to sort of preempt it in advance. You've got to reduce that risk ahead of a potential major event. It doesn't even have to be around a major event, but that's another way to limit, that downside risk as well. Okay. And this can be really, really helpful, but it's got to be done in advance. And the point is this: if prices go down here, yeah, I'm not losing on 100 shares. I'm losing on, just as an example, I'm losing on 25 shares. Now, is there anything stopping me from trying to add back into it if, in fact, it starts to go in my favor? Like if it starts to do this, it starts to bottom and starts to go up. We close above the high, the low day, for example, you get a K hold, which we're not getting right now, but let's just say we did get that, and it begins to look like a flag pattern unfolding. Well, as long as the market's open, we can simply just readjust for that and add in an additional 25 shares, and that would be the 50, right? So really focusing in on that downside protection. Key point, starting with the risk side first, and then if the market does its thing, then we can start adding. It's sort of counterintuitive. You guys, I got to say, when I started trading, I wanted to buy my entire position right there, because if it went up, and that was the key point, right? If it goes higher, I've got all my positions right near the low bounce area, right? But how does that fit exactly with downside protection? Not great. I've got a big chunk in there. And so the other aspect of that, I'm going to write this down here in just a second, but how much are we willing to risk on any given trade around these earnings events? We could say this to ourselves, heck, I'm willing to, this is what some traders will do. I'm willing to risk 1 to 2%. Sure, sure. But what if the market has a different idea of our portfolio? A 1 to 2% of our total portfolio, so 100,000 portfolio, for example, hey, we're willing to risk 1% of that 1K, right? We're willing to risk that. Okay. But market might have other ideas around a big earnings event, and you got to be prepared for that, folks, in advance. There's no other way. Nobody knows where some of these moves can unfold to. And I mean, we can go back. Oh, there's so many different stocks that have had, some of these. Well, here, let me just, as an example, I'm just throwing this out, not to pick on Adobe, but I mean, Adobe's had some downward moves as of late. Here's one around earnings over here. I think a lot of people, and this was kind of flattening out here, folks, we talked about this, support, buying on support. There's a lot of support there. We went there for a while ahead of earnings, and well, we gapped down. Let's count it. 1, 2, roughly 2. So that's about 40 points, because that's 22. That's about a 40-point gap, close to, not quite. But then we dipped another 40, so that's about a 60-point decline. Yeah, how did that 1% of your portfolio, only willing to risk that, work out ahead of a major earnings event? Technology, some of these companies can be quite volatile, folks. So we've got to put that in over here. That's just a critical point. Okay, so we've got to, let's put it over here, and we'll just say this. We'll call it, well, exactly what it is. It is, in fact, position sizing. And I'm going to throw it out here because I think in terms of risk, some traders would say this, risking, 1 to 2% of account per trade. Now, that even might seem high for a lot of us too, but it really goes to show how much can we put into a trade in order for us to be in this range. Okay, I'm going to ask you guys a question here in the chat. If I were to risk 10% of my account in a trade, how far could the stock fall in order for me to be risking 1% of the total portfolio? Any thoughts on that? If I invest 10% of my account, so if I have a $100,000 account, I invest $10,000, how far can this fall in order for me to lose 1%? Folks, it's a big stop level if we were to get at that level. It's actually 10%. If I put 10% in, it drops 10%, 10% of the portfolio drops 10%, I'm risking 1% of the account. So it can go quite far to risk that 1%, but how much are you putting in from the get-go? That's all about position sizing. And by the way, at the end of the day, I mean, it really does matter, particularly for you guys here. And I want to make sure you have that down solid, because trading, investing is not a sprint, it's a marathon. And you've got to have, these core principles in place over long periods of time, because it just takes like one, poor event, and it can really affect a portfolio, dramatically, depending upon how much you have in the first place. So keep that in mind. All right, folks. Hey, if you're finding value from this discussion, do me just one favor. It's one thing I care about on these is just smash that like button. It just lets me know that I'm getting an understanding that this is valuable for you. It's helpful. Did want to hit downside protection pretty big today, but there we go. Smash that as well. I wanted to just let everybody know over here too. Oh gosh, didn't mean to do that. Sorry. If I come over here and I just pull up our Trader Talks channel right over here, we've got a number of coaches in here, folks, under our playlists as well. You can find playlists for this class specifically. I'm going to highlight it here just so you can see it. This is the swing trading class that we're doing right now, and we do discuss a number of different topics in this class, as you can see down through here. Different approaches at different times. If this is of interest to you, I'd love to have you on board. This is you can go ahead and just click on this right here. And there we go. So that would be, and by the way, a lot of great stuff in here from all the coaches. Encourage you guys to take a look at, see what classes that you might find of interest. But normally in this class, we don't spend so much time on downside protection, but it's a good time to do it. Normally we wanted to get a good class in on this because we revert to it on all of our trades here. But anyways, folks, love to have you subscribe as well. Be sure to subscribe to our Trader Talk channel. Love to have you on board. All right. So with that, let's go back over into some more trades in here, and we'll dive into a little bit more details as we talk about the trail stop next and different ways to implement the trail stop. So here we go. This is where we're at, and there we go, right there. Okay, perfect. So next stock I want to take a look at, that one wasn't doing too well. Here's JBL, another tech stock. Pull it up over here so you can see it. Now, you guys might notice here too, within this class, we do try to get additional expectations in line that a lot of traders, investors will look for. And that is what? Well, trend type indicators. How's the trend doing? Trend's pretty good. There's your consolidation. This is kind of a longer term trend right here. But how about recent breaks above the prior level to kind of get this longer term trend rolling? Well, there's a pretty good run right there. We have some pretty good money flow signs as well. Break into some high areas there. So maybe some accumulation of volume for those that do use the money flow that could be tied into it. But here's a little bit of that pullback right here. And so anticipation could be that this would be maybe also a flag, another flag type pattern over here, breaking above prior highs. You can see over here, there's no guarantee it will go down that low. You just kind of watch it and see maybe it starts to bottom up right now. Excuse me, and potentially go higher. But there it is around this level right here. So same type of stuff. If I was putting on a potential stop, raising it with the trend, well, let's say, for example, we saw this move come up here, and here's the bounce. Now, we did mention that we could put a percentage stop. We could also put a stop below the low of the move here. In other words, if we were to get a sign of a bounce right there, which we did, we could have an initial stop set in place right here. Okay. All right. Excuse me, below that level, perhaps. Now, is this trading fully with the trend? No, it is not. A trend trade could be, we've run up here. Where's the last low? We're just looking at the low. Now, keep in mind what we just mentioned. This is how the two come together. Position sizing. What's the amount I'm risking here based upon my entry, the total quantities I've got for this trade? Does it put me into that 1% category of risking that for my portfolio or not? That's the question, right? Let me show you this. If we were to break higher with the trend, we could simply take that stop level and put it over here now. If we break this level, we could put it here. Notice what we're doing? We're trend trading and we're letting the stop adjust with that. That is a key approach that can be used. Now, when we're talking about a trail stop, we can also trail this over a certain price amount or a percentage amount. Let's go back to our trade tab. I'll maximize this again. So in other words, we're saying every time we make a new high, this is how these trail stops work. When I make a new high, it's based on the current high that we're at. If we make highs, every high we make from the time we put the trade on, it measures either a dollar amount or a percentage from that high point. So if we start to break higher, we just keep drawing a line higher, higher. Let me redraw this. So if we break up higher here, let's say we run up. We've got a trail stop on. Whatever that high level is we're reaching, what it's doing, and if we had, let's say, for example, a 3% trail stop on here, what is it doing, folks? It's simply just taking 3% off that high and measuring it down here. So a line of a trail stop line could look a lot like this. It's just following it up. Do you see that? It looks a lot like following up with a moving average, but you could have a trail stop in there. Now, you guys understand the difference between a trail stop and a trail stop limit, right? But that would be a couple to keep in mind. let's go ahead and show you over here. If I go to the trade tab again, right click, buy custom, with a stop. But over here, you can't see it on my screen again, but I'm going to pull it. You'll see it on yours. The drop down just below there, there is, I'm sorry, trail stop. There you are. The trail stop as a certain absolute value or percentage below that peak that we keep hitting. So in other words, we keep hitting highs. It keeps raising it from that level. Here is the good tail cancel order for it right there. Okay. You might also have a good tail cancel order on your initial entry as well. Okay. With this particular one, though, what I'm going to do is we're actually going to set this up now, and I'll show you how we can do this just initially. All right. I'm going to look, and I'm just going to show you on a flag pattern. If we were expecting this, this might be, by the way, we talk about this pretty frequently, and we've seen this a lot, but it might actually, there might be a longer term flag, a shorter term flag within the longer term flag. Do you see it over here? You see it on a weekly chart right there, right there. So we might say that's very long. It's a weekly chart. That's a big move. Do you see how we're coming out of this base? We might have this giant target over here, but within that giant target, there could be a series of smaller targets in here too. So in other words, if this move in price is equivalent to, I'm kind of off the charts here, but this move, we might get a number of different mini flag patterns within here. It's kind of a nice problem to have if it unfolds that way. Let's go back to it. I'm going to put a trade on right now so you can see it. But let's just say that this right here is the mini flag pattern. Oh, I got to redo this. Sorry. The mini flag pattern that I'm looking at, this guy right there. Okay. And all I'm going to do is click, get the measurement down. If this is the high, I'm just assuming that this is the range, where it very well might not be, but for the sake of example, right click, duplicate, pull it over. There's the target. The target just below 290. I'm going to go 285, and I'll show you what that looks like. Now, what we want to look at is the potential stop level. To what are we willing to risk on this trade? And what about the percentages below too? I'm going to right now look at this one and say, well, over here, we have this stop level, and I'm guessing that that's probably below the 50% level. Okay, so I'm just going to do my fibs real quick and highlight this. I want to give you guys an example of using multiple signals here to give us an idea. But notice that that 50% level right there is below that prior high, just as an example. Okay, so we've got that in place. It's right over there, roughly about 235 to 285. I'm going to go to my trade tab. I'm going to right click, buy custom order. I'm going to do an OCO bracket. Now we have our potential exit level up on top. Good tail cancel. It's actually quite a bit higher, 285. Down below, 235. 235. Good tail cancel again. We'll go ahead and just put this as a limit order right here. But I'm going to knock this guy down. I'm going to go ahead and put this at 25 shares as an example. And I'm going to lock this in right here. So we're all in place. Now, just to show you this, confirm. Won't send it through just yet. There's the order confirmation box right there. You can see what we're doing. We've got a target to the upside and that potential, exit level down below using the stop. Some additional information as well, but I just put that on. Okay, so a quick note on that. Once this is drawn, we can go over here and draw these areas equivalently as well. This is below a stop point. This is, below a support level that we can look at, right? So that is in place, and okay. Let's see. Do you know the general measure from the breakout up? Oh, yeah. So what we're doing, I measured it as if this is the low. So whatever the low is, our anticipation, and sometimes that low is measured when you're closing above a high over here, close above the high of the low day, which we don't have yet. This was just all kind of an estimate of where that might be. Lastly, just a couple others to look at. This is another one showing a little bit of strength as well. Now, there is some resistance over here, but a little bit of a flag as well. Finally, I'll pull up a couple of others. This is one more off the bottom end, CMC, SA, or Comcast down below here. You've seen this longer term consolidation, maybe some signs of a higher high, higher low over here. But folks, always be mindful of those earnings over there. Okay. All right. Well, everybody, that is what I had in place. Be sure to follow Ben and I on X. Let's see. There is my handle right here. I'll just pull it up real quick. We do post a number of different content points on X. In fact, we have I'll post earnings just for the week on every week that we've got them out here and just performing stocks over a period of time. But love to have you join us, folks. I'll just go ahead and throw this in the chat as well. But on that note, folks, a lot of our discussion today was on downside protection. In fact, nearly all of it. But hopefully that gave you some ideas. More on this next week as we go into some of the options trades, folks. Great being with you. Have a fantastic rest of the day.